Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of the trading signal service that we provide here. If you would like to receive trading signals from me, myself, or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website. Once on the website, you'll see that we charge a very small fee of $249 for a year's membership. What I'm going to do is leave the website link below this video in the description, so if you do want to join our team, all you have to do is simply scroll down now, click on that link, which will then take you to our website, and then that's where you'll then be able to join our service. Thank you very much, and I hope to see you on our team soon.
So guys, in front of me is the crude oil futures market, and as you can see today, we're trading in the green ever so slightly. We were trading back above that $40 candlestick, and as well as that, we're trading back above the 50-day EMA. So very encouraging for the bulls here in the crude oil markets. However, I don't like crude oil at this moment in time. I've drawn that blue rectangle box on the screen, and I said if we get a daily close above the blue rectangle box, then we're likely to go and trade towards the 200-day EMA, which is around $42.25. That's a blue line that you see. But if we get a daily close below the blue box, which is around that $48.60 area, then we're likely to go and retest the bottoms, which is $36.56. But looking at the fundamentals now, going into flu season, going into winter, typically where coronavirus cases are expected to pick up, I personally see a large decline in oil demand, whether that be through vehicles or air travel. Air travel represents a huge percentage of demand for crude oil, and air travel is expected to decline a lot now that we're leaving this summer period where people typically like to go on holiday. Now we're going into the winter months, people have to be back at work, or even if that's working from home. And as well as that, a second lockdown is looming, here in the UK, in Europe. In fact, there's many countries which are the word lockdown is starting to reappear in the news, etc. And I don't think that the US will be too far behind. The number of cases spiking there as well is not looking good either. So, I don't think we'll get a national lockdown like we did back in March, but there will be lockdowns of states at least, and that will have a huge impact on the demand for crude oil. So, from a fundamental perspective, oil isn't looking too great, but technically it's looking a lot better. We're trading back above that 50-day EMA. So if you're trading crude oil on a technical perspective, I would definitely stick to the strategy, as if we do get a daily close below the top of this blue box, which is at that $40. So basically, if you get a daily close up above $41 a barrel, then you should go long on crude oil up towards the 200-day EMA, which is at that $42. But equally, if you get a daily close below the 50-day EMA, that indicates that it could be a good time to short this market, aiming back down towards the lows at around $36, due to the fact the fundamentals aren't great and you're trading back below the 50-day EMA. But as for now, we're trading above the 50-day EMA, so we are looking good. But personally, me as an investor, I'm looking at the fundamentals and they're just not looking great at all.